So when we talk about the maximum historical drawdown of a system, what we're doing is we're saying at any point in the backtest, we want to find the percentage drop from a high in the equity curve to a subsequent low. Now, what the trading software will do is look at every high point and every subsequent low throughout the whole backtest. And that low could have come 2 days later, or could have come 3 months later, or 3 years later, or 10 years later. And what it does is it calculates the percentage drop from whatever that high point was to the low. And that's the maximum historical drawdown. So it's not a number of bars look back, it's all the way to the beginning of the backtest look back. And so we just find all of the high points, all of the subsequent lows, and measure the percentage drop. And we do that for every single bar in the backtest. Every time there was a new high, then calculate subsequent low, and then it goes through all of those and finds the max.